Here are the three biggest red flags that the bank/you do not want to see. And just because they're red flags does not mean that you shouldn't buy them. You just need to understand the risks involved and whether or not there's an opportunity there or to walk/run away. Number one is the most common, and that is unconsented works. In New Zealand, New Zealanders love DIY and they love doing their own stuff to their own houses. But some of that stuff needs to be consented and isn't. And if you see in the sales and purchase agreement that there's an unconsented toilet put in the laundry, or the bathroom was renovated and they didn't get the waterproofing checked off, things like that, then the bank ain't going to give you a mortgage for the house because it can't be insured. And then the bank ain't going to be able to get their money back if something happens. So your goal is to make sure that it gets a certificate of acceptance from the council before settlement, or it is removed, and then the bank should be okay. This is something that obviously you need to talk to your mortgage broker with before you go unconditional on the property, because you need to double check. But if there's unconsented works, a lot of people are just going to walk away. But for some people, that is an opportunity to say, hey, let me make you an offer. It's lower than what you think, but I'm going to get it removed or fixed or get insurance or whatever. Number two is plaster houses. I talked about this in the last video, and that's just because they're more prone to being leaky. The bank is just going to want a weather tightness report to make sure that it's not. There is some opinion that these houses, if there's no cavity and built in the late 90s, it's not a matter of if they leak, it's a matter of when. But it's very house specific. Some people have no problems. Some people have lots of problems. The first thing you need to do is, of course, get that weather tightness report. And then you just need to think about the reputation that a plaster house has that's built in the 90s, even if it is all good, because that might make it harder for you to sell in the future. Easier for you to buy, harder for you to sell. And number three is a leasehold title property. Again, I've done this in a different video, but a leasehold is basically that you own the house, but not the land that it sits upon. You have to pay rent or pay a lease for the land. And the reason why this is a red flag is because you don't own the land. So the person who owns the land could put the lease up very high and you may not be able to afford to pay it. And it just doesn't go up in value, and people just, shouldn't buy these. So those are the three main ones. Obviously there's some others, but usually if you see a house that's either really cheap, it's leasehold, or too good to be true.